Let me ask you a question. Why does your income ceiling keep coming back even after you work harder, earn more, or pay down debt? The system may still be reading the same old financial signals. I've spent years studying how banks, credit reports, and cash flow records read a person's financial position. And the pattern is clear. More income does not always create a new position. So today I want to show you why your income ceiling keeps coming back, what the system is seeing, and why more effort alone may not change the result. We're going to look at 3 places where the ceiling can hide. First, the data attachment to your name. Second, what happens to your money after it arrives. And third, the financial identity the system assigns to you. And that last one is the part most people never get shown. When most people hear the words income ceiling, they think about a low paycheck, but that is only one version of it. An income ceiling can also look like this. You earn more, but you keep the same amount. You pay your bills, but you still feel pressure every month. You have money coming in, but you do not have more room. You apply for better opportunities, but the approvals are weak. You grow your business, but your personal financial position does not get stronger. This is an income ceiling. It is the point where more money enters your life, but it does not create more options. Because the truth of the matter is income and position are not the same thing. Income is what comes in. Position is what that income allows you to do. That difference matters greatly. It matters to your credit, it matters to your business, and it matters to your life. That is the CBL promise. Credit, business, and life are connected. If one area grows while the other two stay under pressure, the ceiling can become back, and it will come back with vengeance. Now, we got to understand this. The system keeps reading old data. Let's talk about the real problem. The financial system does not see how hard you nor I work. It doesn't see how many late nights you give. It doesn't see the stress you carried. It doesn't see the sacrifices you made to pay that bill. It simply sees data. It sees reported balances. It sees payment history. It sees debt levels. It sees account age. It sees cash flow patterns. It even sees business records, and it sees how you use credit. Now, let me be very clear. Your effort matters in real life. But effort is not the same thing as a strong signal inside the system. That is why credit scores do not respond to effort. They respond to data patterns. Here's a simple example. You may pay your credit card bill on time every single month, and that's good. But if a high balance is reported before the payment reaches the system may still read a high pattern of use. You did the work. The system received a total different message. That is the difference between effort and position. The statement date is when the credit card company reports your balance. The due date is when the payment must be made. These are not the same thing. I'm going to say it again. The statement date and the due date are not the same thing. If you do not understand the difference, you may keep making payments while the system keeps reading the old pattern. So the first reason your ceiling may keep returning is very simple. The system may still be reading an old version of your financial position. Now, we got to look at why this happens. More income can move through a weak cash flow structure. Now, we got to look at when this strategy works best. So let me tell you this. You have to look at what happens after the money arrives. More income does not automatically create more freedom. If the structure does not change, more money may only make the same structure bigger. Think about it. Money comes in. Old debt takes a part of it. Interest takes another part. Business expense takes another part. Taxes are waiting. An emergency shows up. Then the month starts again. The person is earning more, but the money still has no room to move. That is not always a discipline problem. Sometimes it is a cash flow problem. Cash flow means the way money moves in and out. It is not just how much money you make. It is when the money arrives, where it goes, and what remains after it moves. This is where the CBL connection becomes important. Credit affects the cost of debt. Business affects how money enters and stays in the business. Life affects the obligations and pressure you carry every month. If those three areas are not working together, you may keep earning more without building more room. The system often teaches you to manage the pressure. It does not always show you how to change the position creating the pressure. And that is why paying debt can be helpful without being the complete answer. You can reduce one balance and still have the same cash flow problem. You can earn more and still have the same financial pressure, and we see it all the time. The real lesson is this: the ceiling does not always return because you're doing nothing. Sometimes it returns because the money is moving through the same structure. Now, your financial identity may not match your goals. Let's talk about the part most people never get taught: your financial identity. Financial identity is the way your financial position is understood by banks, lenders, businesses, and even by you. It includes what your records show. It includes how your accounts are structured. It includes how your credit is used. It includes how your business is organized. It includes how your cash flow is reported. It includes what kind of opportunity your current position can really support. You may say, I make more money now, so I should qualify for more. That makes sense from your point of view, but an institution may be asking a totally different question. Does this person have stable cash flow? Can this person manage more access? Does the business show a clear purpose? Does the credit profile support the request? What about, does the financial record show room, or does it show pressure? The system does not only ask how much money you make, it asks what your current position can really support. And listen, that's a major difference. A person can have a higher income and still have a weak financial identity. A person can have a good credit score and still have weak cash flow. A person can have a growing business and still have poor separation between personal and business money. This is why credit, business, and life must be looked at together. Credit is one layer. Business is another layer. Life is another layer. The goal is not to chase one number and hope the rest follows. The goal is to understand the full position, because once you understand the position, you can see why the ceiling keeps returning. Now let's look at what will not break the ceiling by itself. Let's talk about why not. Why will working harder not always break the ceiling by itself? Because working harder may increase income without changing the debt structure, the reporting pattern, or the cash flow plan. Why will waiting for a better credit score not always break the ceiling by itself? Because a score is only a part of the financial picture. It does not automatically fix weak cash flow, high monthly obligations, poor account structure, or unclear business records. And why will paying debt not always break the ceiling by itself? Because you can pay down one balance and still repeat the same pattern that creates totally new pressure. Now, I'm not saying these actions are wrong. Paying debt matters. Improving credit matters. Working hard matters. The problem is believing that one action is the whole answer. That is the part the system often leaves out. The viewer is told to fix one piece, but the pieces are connected. Same person, different position. Let me give you a quick story. Imagine two people with the same income. They work in the same field. They have the same goal. They both want more access access, more stability, and more room for growth. Person 1 earns the money, pays the bills, mixes business and personal money, and uses credit only when pressure appears. Person 2 earns the same money but understands what the system is reading. The money has a clear job. The business records are cleaner. The credit is used with a purpose. The personal plan matches the business plan. Same income, but they have a different position. That is why two people can make similar money and receive very different results. Same person, same habits, but the positioning is different, and it makes all the difference in the world. Maybe your income ceiling keeps returning because you've been trying to solve a position problem with effort alone. More effort may help you earn more money, but the system still needs to see a stronger position. Once you understand that, you stop asking, what is wrong with me? And you start asking, what is my financial position showing? That's a better question. It gives you something real to examine. It moves you from shame to clarity. And clarity is where better decisions begin. Now, you've probably been told your problem is discipline, budgeting, or simply working harder. Those things may matter, but they may not be the root problem. The deeper issue may be a financial system you've not been shown how to see yet. So I built a free tool to help you identify which layer is creating the most friction. In about 5 minutes, you'll have your answer. It's called the CBL Financial Positioning Diagnostic. The link is in the description. And listen, there is zero cost, zero pressure, but a boatload of clarity. The diagnostic can help you see where the friction may be, but seeing the problem is not the same as building the full plan. That is where the CBL Wealth Blueprint comes in. It helps you connect credit, business, and life in the right order for your situation. It helps you look at the problem, build the sequence, and understand what should happen next. Because the goal is not to collect more information. The goal is to create a position that can support the life and business you are trying to build. Do me a favor, drop a comment below. Let me know where your ceiling keeps showing up. Is it credit? Is it cash flow? Is it business funding? Or is it something else? Your answer may help me build the next video around the problem you are facing right now. And do me a favor real quick, subscribe to this great channel. Hit that like button right now because we want many people to see this so they'll be on top of this information just like you. Here's what I want you to remember. The system may be measuring your old position, but that does not mean your future has to stay there. Success doesn't happen by accident, my friends. It happens when you understand the system and position yourself the absolute right way. Well, I want you to be blessed. Have an absolutely rest of the day. Make it so awesome. Go after the life you want by working on your positioning. Be blessed.